Hi everyone, this is Brian Neal with TradeToBeFree.com, and today I want to go over some of the best chart patterns that are working now in 2019. We've had a lot of big winners so far in 2019, especially out of these triangle patterns and these triangle shape patterns. And what I'm looking at right now is Netflix, which was in a descending wedge pattern, which is not technically a triangle pattern, but it's a descending wedge and it has that triangle shape. And we found this in December and we featured it to clients, and I want to go over this pattern and talk about how to trade it and how to recognize it. And the first thing that you notice with the wedge pattern is that you have these successive highs in the top portion of the pattern. You can see 1, 2, 3 here, and then down below we have 1, 2, 3, which is pretty close, and then 4 here. Okay, so technically if you have two touches, if you have two highs that you can draw a line through on the top portion of the pattern and two lows in the bottom portion of the pattern, that's enough. But it has to be two lines that are converging at some point in the future. Okay, that's the wedge. So if we extend these lines to the right, okay, they'll come to a point off here to the right in the future. And so what will happen eventually is that the price will break out either to the upside out of the downtrend resistance, which is the line connecting the highs, or it'll break down below the lows. It has to do one or the other eventually because these two lines will come to a point. Okay, and what's going on is that the bears are taking over, the sellers are taking over at a successive lower points in this trend. Okay, and the bulls are taking over at successive lows in the trend, and that's what forces the price lower and the price higher is when the sellers outnumber the buyers in terms of total volume of shares being bought or sold. And down here, the bulls take over when there's more shares being bought than sold, and that at that price, and that forces the price to go higher. Okay, so it's just the supply and demand dynamics that we're seeing on the chart, and that's what really a chart represents and tells us what's really going on in the marketplace, and not just what should happen and what the price should be at this point. Okay, when you have this condition where the bulls are taking over at these lower points here, but the trend line is actually going to a point that's going to connect or intersect the top trend line, and it has that descending angle with both the lower trend line and the upper trend line. That's called a wedge, descending wedge. Okay, and if we click the chart here, we can see that back in late December, the price closed above the top of the wedge, top of the trend line. Okay, and closed above that. And one entry point that we like is a close above that top trend line and then a move above it at some point in the near term. So we wait for the close above that top trend line to show us that this trend is breaking, okay, and that that's confirmed. But the next day, so it's not less likely to be a blip or an outlier condition, and that the price is actually breaking through this trend line and going higher. We want more confirmation of that, so we wait for the close above there, and then it moved above that day's high at some point in the near future. Okay, so that's often our best entry point. Now, if we have a real strong catalyst for the stock at that point where it's breaking through this trend line, then we often just go ahead and just buy it as it's breaking that trend line. Okay, but usually the best thing to do is wait until it closes above this downtrend resistance, because as you can see on this chart, at this point right here, it went above the trend line and then it closed right down beneath it, and then went lower and actually went below the bottom trend line a little bit. But if it recovers quickly and if it recovers strongly going the other way, that's okay. Okay, if it closes below this bottom trend line. Some people wanted sort of buy it at this lower trend line here or maybe here, and oftentimes it'll just continue going lower and really hasn't confirmed the trend back to the upside. So, and this was also breaking a long-term downtrend, or long-term uptrend, I should say, going back several years. So you often see that where you have a market condition where the Nasdaq and or the S&P 500 is selling off very, very strongly, and this selling pressure in the market will force the stock below its long-term support. Okay, so if we draw the line connecting the lows here, you'll find that it went a little bit below that line here. And when you have that market condition that's sort of forcing all stocks lower like that, you often get a rebound at some point. And if you do, the market rebounds, it'll jump back into that long-term uptrend channel that it's been in for a number of years. Okay, but that's the first key in finding really good opportunities with the descending wedge and with triangle patterns in general, is to first focus on stocks in these long-term uptrends over the past few years. Okay, and that's one of the keys to our success trading these patterns, is that we look for ones that have this long-term uptrend. And maybe it's a year or two, maybe it's several years, maybe it's going back 10 years. Netflix is one of the top growth stocks in the market, so it'll often have, those types of stocks will have these really strong long-term uptrends. Okay, now once you get in the trade, a good stop is below the prior swing low. Now in this case, we have a very strong reaction after it broke below the low of the pattern. Okay, and in this real high volatility environment, sometimes the best thing to do in this situation is to tighten up the stop and realize with this kind of market volatility, it's either going to go or it's not. And so one good way to play this is below the prior day's low, or 2 days prior, maybe 4 or 5% below the entry point. Okay, and if you want to give it a lot of room and you're willing to wait longer on a pullback, if it does pull back, a low below or I'd stop below the prior swing low here, or even a close below this prior swing low here, also is a good stop loss point. Now the target usually is, for most traders, is close to this prior high through here. And with Netflix, that's a pretty good price target, and that worked out pretty well. If you took sort of the average price through here, or maybe the instead of the top of the pattern up here, if you went sort of halfway in between a recent low and took an average through here, that tends to be a pretty good price target on this. One way to trade this, though, is if you get a really strong breakout like this and the price really reacts well after the breakout and really takes off, one thing to keep in mind is that we don't want to let this, we don't want to take this off too early. When you get a strong start out of a trade, you usually want to just let it go and at least wait until the price closes below a prior day's low, or maybe hits that target area up in here. So, if you get a 10% move, 15% move, you want to take some off. And then once it goes up to a certain point, you have to look for opportunities to take this off. And for me, an ideal point would be to wait until it closes below the prior day's low, which happened here. So if you see that, you can take it off at that point, or take, maybe 2/3 of it off at that point, maybe keep a third or so and see if it continues going higher from there. Okay, so maybe a third after about 10%, 15%, and then another third up in here after it closes below this low here. Okay, and then you can let the rest ride if you want to. Given this has a very strong long-term uptrend leading into the pattern, we kind of violated that uptrend support going back several years, probably going back 10 years or more. If we go back and look at this for, say, the last 10 years, we'll probably see more of a confirmation of this uptrend support level. Okay, so actually if we go back to, say, 2013, looks like if we draw this trend line, you can see we can play this trend line, and if the fundamentals are still improving, if they still have the growth, and if the outlook is still pretty good, these top growth stocks tend to go through periods where maybe the growth isn't expected to be as strong or quite as strong, but they find a way to um, do some acquisitions or to come out with new products or services, to find a way to accelerate that growth again out into the future. Okay, these type of stalwart growth stocks for a number of years, stocks like Amazon, Netflix, and a few others, they tend to do that where, they just find a way to get into new markets, to improve their product or service, to improve the pricing, the value proposition, and continue to create that value for shareholders and for customers over time. Okay, so one thing you can do on this is keep a third after that, that first explosion out of the pattern, and just ride it until it breaks this very long-term uptrend support. So that's, that may take years. That might be 5 years later, and you're sitting on a huge gain with what's left. Now, eventually, every growth story ends, and this stock will break its long-term uptrend support, and that trend line going back, 7-10 years is one area where you can look for an exit point. Another area too is you can wait to see if it closes above or near the top of this uptrend channel, so you can draw a line, connecting these highs in the long-term trend. And so if it really takes off again like it did through here and doubles in price within 6 months, let's say, and it gets up to whatever the top of that trend line is, might be $1,000 or $1,500. You can draw the trend line at that point and see if the price is near there, and then that could be a place where you could take off your final shares. Okay, so you've got a short-term trend or short-term trade over a few days. In many cases, you've got a intermediate term swing trade over the next few weeks, and then you got a potential long-term swing trade, position trade, really, for potentially a number of years. Okay, so with these top growth stocks and these stocks that have the rapidly improving fundamentals that are in these higher price ranges, if they have these kind of long-term trends, okay, and the fundamentals are still improving, you have that kind of optionality. You can have that the option to keep a part of your shares and hold them for the long term. Okay, and that's what the exciting part is about trading these type of top growth stocks, and also young growth stocks in the market. Companies that have been in the market and have been trading for a year and a half, 2 years, and they start breaking out of their sort of opening range over the first year and a half of trading, and they have the explosive growth and have the potential to continue that growth off into the future. Those type of stocks too can be a very good opportunity to hold a portion of your shares for the longer term while still swing trading. And you can sort of swing trade around the core position looking for these triangle patterns, which include the descending wedge. And if the descending wedge, and if the wedge pattern comes down and touches or comes near a long-term uptrend support like this, those tend to be the best ones to play. And we've seen a lot of these in our alert service that have made big moves afterwards. Another example of a really big descending wedge pattern. And here's another good example of that, of a descending wedge. And we can put this on a wider chart here so you can see it. But if you sort of exclude the outliers, you can draw these trend lines here and see this descending wedge here. And once you get 3 or more touches is when we tend to get more interested. Okay, so if you have 2 touches in the wedge, That's not so interesting if you have 3 or more. And there's often different ways of drawing these. You want to see at least 3 touches. So here's a good example of that. It roughly lines up. Okay, so you got 1, 2, 3, 4 touches. Here again, you're almost closing below the bottom trend line. So if you're starting to try to buy down here, you're potentially taking a white stop loss if the Fed comes out and they stay more neutral to bearish or more hawkish, I should say. This could fall apart and go right straight through here. So I want to wait till the trend is confirmed back to the upside. Okay, I want to see the close above the top trend line, and either by here or after that first pullback, if it closes above a prior day's high after that first pullback, that's another good entry point. And then close or a stop below the prior swing low, which is here or here. Okay, and go for that same kind of target where you're looking to get out, up in this area. Okay, near the prior highs, so maybe up in here where it closes below a prior day's low, like right here. Then keep part of it until it breaks the longer term uptrend. And this one too has a longer term uptrend going back a few years. It's not as well defined, quite as well defined, but it's still there. And you can keep the other portion of your shares until it say closes below the 50-day moving average or the 50 EMA in this case. It is moving strongly, so the exponential moving averages are more a better moving average to use. So if it closes below the 50 EMA, that might be your final exit point, okay, which occurred up in here. So, and then you can look for other points as it's trending higher to get out, and maybe a large candlestick pattern, a large bearish candlestick pattern like right here might be a good exit point. Okay, so that's 2 examples of the descending wedge pattern. That's one of the triangle shaped patterns that we've noticed that's worked really well over the past few years. Again, that longer term uptrend and the fact that the fundamentals are rapidly improving tends to lead to better results. And if you have that long-term uptrend support level that you can draw, and if that wedge comes back and touches that, gets closer to that, and starts rebounding strongly off of that area, that tends to be a really great swing trading entry point for this. Now, a lot of people I've read online don't take the descending wedge that seriously, or they don't see this as a really good trading opportunity as much as some other patterns. And I found that this is probably one of the best trading opportunities in the market. You can find these a lot if you look closely for them on top growth stocks and stocks that are beating estimates with rising future expectations that have that long-term uptrend. So it's a great pattern to look for. Okay, and again, it's a reversal pattern that we're looking for, but it's a reversal pattern within the context of a longer-term uptrend. Okay, so maybe we're seeing a downtrend that lasts for a few months, but if we go back a few years on a chart, we'll see a longer-term uptrend that's in place, and this is just a consolidation area for the stock until it's ready to take another leg higher. Okay, and we definitely want to see a bull market in place before we jump in on these. We want to see that market trending higher or more neutral trend at least before we get interested in trading this, as with most bullish trading opportunities and chart patterns. So, okay, thanks for watching, and thanks also for responding to the survey. We had a few hundred people respond to our survey online, and our next set of upgrades to the site's coming out in the near future, and we'll use those results, analyze those results, and figure out what the best training products are for you guys, and changes we can make to our alert service to improve that. And we continue to improve those services over time, and look for those new features in the weeks and months ahead. And best luck in your trading, and I'll talk to you again real soon.